Good morning anyone, and thanks for joining the course. On this module we will go over homework 2 and we will see if anyone has done anything, and we'll review homework 2 one more time. We already did several dives into homework 2 during the previous Q&A sessions, so let's dive in. Here are the instructions for the homework 2 which I distributed. To be able to do that, you will have to read the instructions for homework 0 and homework 1. So the first part of the homework 2 was preparation of the part of the resume for those who think they need work experience, relevant work experience, while they do not have relevant experience at all. So there was a recommendation from Harvard Business Review article, and I did a video what can be done about that. And the task was to create kind of a piece of your resume where you would try to present your knowledge acquired in that course or your other course as part of your resume. As I see, no one was interested in that much. Let me know if that was relevant to you at all. So because there was not much interest in that, I will switch to the next topic. And the next topic was preparation of the income statement. For the income statement, we go to PwC Financial Statement Guide. And we need to find a PDF version here. I'll share a link with you here. And income statement is a page 21, starts from page 21. There are some introductory matters, and the income statement itself is on the page 24. So basically, in your income statement, you need to show your net sales and cost of sales and calculate gross profit. However, gross profit is not required. If you look closely, you see that the accounts in bold are the ones which are required. And if you read the instruction above, and subtotals for gross profits are not actually required, but income loss from continued operation is required. And so we have net sales here, cost of sales here, other operating expenses if we have something, selling general and administrative expenses, provision for doubtful accounts, depreciation expense. Not always. Sometimes it can sit in the cost of sales, sometimes it is moved to here just to make it easier for the user of financial statements to reconcile non-GAAP measures. Like, for example, EBITDA. Many companies report EBITDA, and their EBITDA is kind of a key management indicator, key performance indicator. And in that case, it's kind of advisable to have depreciation expense separately so that EBITDA can be easily reconciled to the income statement. Okay, impairment laws, if we written off any property, plant and equipment items, and restructuring, if we have any, other general, so we got non-operating income, and we got interest and amortization of debt discount, which is kind of an approximation of the interest. do not confuse that with amortization of intangible assets. Amortization of debt discount is different. Okay, non-operating expenses, income loss from continuing operation. Sometimes it happens that entity wants to discontinue or sell a part of its business, some line of this business or segment of its business. In that case, if entity is in the process of such sale, it needs to present the financials of such business separately. Or if the entity has just completed that sale on the income statement, it needs to show the results of such entity separately. And if it's sold, it shouldn't be included in the balance sheet. And also there is a comparability requirement, which says that, okay, you need to present 2 financial years, and the data which you presented in those years should be comparable. So if you acquired a new business in 1 year, you need to show your financials in the comparable fashion. Or if you sold one business in 1 year, but the previous year was with that business, you need to show that in comparative basis. It's a bit, I would say, advanced accounting. I will probably make a video about that separate, so we will not discuss it further today. So this is the structure of the income statement which you should use in your homework. As far as I see, not much people reached to that point. So who is that? Irene. So in Irene documentation, I see that she did get to the income statement. So she has revenue products, revenue services, cost of products, cost of services, and her trial balance is 0. And then she uses a mapping to look up to some if stuff. So she has general and administrative, revenue products, revenue services, and it's pretty much summarized. So if you did a homework and you want it to be reviewed, you can send me a link now, or you can send me a link in the future Q&A, and we will take some time to review that. So homework can be reviewed. Also, if you started a bit late in the course and you feel that you are lagging with the homework, you can contact me in the direct messages and I can help you a bit to catch up, depending on the time you are able to invest in getting that knowledge. So yeah, basically Irene has completed the task with the income statement, and it looks pretty nice here. Let's see what we have. So she also has classification with revenues. Let's see what headers do we have here. Expense services, revenue products, revenue services. Okay, what about administrative expenses? Oops. Autofilter is a good feature to make an analysis of your financials, of your transactions. So you basically can filter through everything. Utilities expense. Okay, so for some reason it says liability here, but it should be an expense. We do not use that. That column is just for reference, so it's optional. That's why we can fix it, we can leave it at this, but to be precise in our documentation, we should say that that's an expense. Let's see what other accounts do we have. Advertising 225, advertising expense. Okay, so that's also an expense. Okay, let's take a look. Let's take a look on new accounting entries for Irene. Okay, sold 10,000 worth of services for cash, paying to subcontractor 5,000 in cash. So we got cash, debit cash, credit revenue services, and we at the same moment we debit cost of services and credit cash. That's correct. Owner withdraw 300 for personal use. Capital cash, that's correct. Prepaid insurance policy 4,000. Prepaid insurance cash. That's interesting one because it depends if we actually used that insurance in that month and for how long did we prepay that. So assuming let's say the insurance starts next month. In that situation, we will just reflect an insurance expense. For example, if 1 month passed, okay, 1 month of the period covered by insurance has passed. We need to put kind of a lot of details here, and let's just make it, okay, let it sit as 1,000. So we will get an insurance expense and credit. So we prepaid insurance here, but we haven't expensed it yet. In the accounting, under accrual basis of accounting, we recognize the prepayment. And for that matter, when we started to use that insurance, when we started to actually consume it in our business, when we started to incur the actual expense, we need to recognize 1/12. So assuming we prepaid for 12 months, we recognize 1/12. It will not be a nice number, but we just have to do it. And we credit it to the prepaid balance. And I've just come up with that account. Let's see if we have it on the trial balance. Okay, it doesn't look like we have it. And depending on the circumstances, it can be probably allocated directly to goods or services, or we can just keep it in the selling, general and administrative expense. So for that reason, I will keep it in the selling, general and administrative. So let's okay, so you can see it here. And now our trial balance balances. You see that prepaid insurance goes down, and it should show up. Cost of sales. Okay, for some reason that account doesn't show. It shows 0. And I would assume that the reason is because it is spelled differently compared to here. So I will try to equalize it to here. Okay, BB. Okay, I see what the reason was. The formula wasn't right, and that was because the formula here references BB column, while we should have reference AA column. So I will keep it yellow as a sign that I changed something here, and I will also highlight that operation by yellow. We are doing that just to explore further the how to say it, accrual basis of accounting. So probably you will be able to learn that even if we prepaid insurance here for 12 months, we need to recognize the expense monthly. We need to recognize the expense monthly every month when we started to actually use that insurance. Okay. Any questions? I see we have 15 minutes more, so please ask your questions, because during the lecture it will be much harder to answer your questions. What else can we do in the homework? Okay, the last part of our homework, it's actually two parts. One related to QuickBooks. Has anyone got any difficulties with posting QuickBooks entries? Or maybe someone has difficulties with opening free QuickBooks for accountant accounts? Let's see if I got any questions in the Q&A file. No new questions here. Okay. Okay. So when you are opening an account, you need to make sure that it's a QuickBooks for Accountants account, and you can get started here. And when you sign in, you need to make sure you select Accountants account for signing in. Okay. And in that task we discussed okay, we wanted to post owner's investment, we wanted to post building acquisition, we want to post inventory acquisition on account, and pay the bill for the inventory. Okay, to make a posting, you click new and you click bank deposit, and that will be your amount received from basically anyone, but please make sure that your transactions with customers and vendors, they should go through invoice and bill options, not through the bank deposit. Okay, so that's me here. That should be owner's investment, and we can put any amount here, 50,000. Okay. Saved and new. Let's now open reporting in the new tab. And in the reporting, let's open balance sheet. I have some previous transactions in here, so it will be a bit harder to reconcile, but if we click at the owner's investment amount, we will see these 50,000 deposited here. Okay, so what's the next task? Building acquisition through journal entry. So I described every way to do the entry here. So to acquire a building, we did new journal entry. And if you don't have some account, you need to add it to create it. So let's put building 2. We got it for 200,000. We paid part in cash. And we paid other part with mortgage. Current mortgage. Non-current mortgage. So we paid 50,000. We paid 100, sorry. 148,000 and 2,000 on current mortgage. Okay, it seemed to balance. Journal entry, October 31st. Please balance debits and credits. Oh, okay, that's great. That's great that Quickbooks doesn't allow me to proceed with the entry until debits and credits are balanced. Okay, so I saved it and I close it, and let's see what else do we have here. Post inventory acquisition on account and establish an inventory item in Quickbooks first. So to establish an inventory item, we go to Sales, Products and Services. And we click New, and we establish some new inventory item. I will not be doing that. I've already got quite a few inventory items, merchandise 1, 2, 3, several services. So you need to do that. You can give it any name. Okay, and now we go back. We go back to New. Let's see what instruction says. Enable inventory, add inventory. So we've done that step. Purchase some quantity through the bill. As I've already told you, if you have transactions with your vendors, with your suppliers, you need to do something here. If you have transactions with your customers, you need to do something here. It's not a good practice to use like bank deposit or journal entry accounts when you do transactions with your vendors and customers, because in that way Quickbooks may not interpret transaction properly. Let's see what we've got. So we get a bill from vendor. So we received some supplies. Vendor 2, terms, whatever. Okay. When we have inventory items established, we need to use item details here. So we already have, okay, let's say we bought 1,000 items at 20. And we got a bill for 20,000. Save. Let's save it. Okay, let's go take a look what happened to our balance sheet. Okay, where is it? Reports. So once we bought that inventory, let's see. Inventory merchandise. Let's make sure we are under accrual basis. Inventory merchandise. Here it is, 20,000. So it posted correctly to inventory merchandise. Let's go back and check our accounts payable account. Since we just created a bill, like we received a bill but haven't paid it yet, it will show up in our accounts payable account right here. So we have that bill here, 20,000. Okay, now we go and pay the bill. To pay the bill, again, we need to use, we do not use bank deposit. We should use pay bills. Okay, we kind of have some overdue bill here, but we don't care much about it. Let's just pay two bills. 520,000. So we are paying both of these bills, and we save and close. And let's take a look. So this was our accounts payable account. And as you can see, the amount stayed the same. That's because we did a bill payment in November, while we are still in October in here. If I change it to November 30, it will show that payment. You see the date here. If we did it erroneously and we actually paid the bill in October, we can click on that transaction and we can adjust the payment date to October. Okay, so it adjusted and now it shows October 31st. For the last part of the homework, which was an IRS publication, I'm building my file slowly, so you can refer to that. Let's see where it is. So the default homework file is here, copy me file. So we covered in these two columns, we describe the transaction and how it would look like under the accrual method. And then in these two columns, we search for accounting guidance to find how the transaction is treated. We will revise these in the following modules, so I will not concentrate much on that. I advise you, because this is a good exercise to make you familiar with COP 535538. To make you familiar with the IRS documentation. It's a kind of a bit hard to read, but the only way to learn to read it is to just read it. I mean, there is no other way. Maybe you can find some book which would be more user-friendly than that format and provide you with more examples. But you should remember that that stuff kind of changes every several years. Maybe principles mostly do not change, but they might change many, like the threshold for exceptions. They may change treatment of some expenses like meals, or they can change something else. So your main reference point in any case should be the publications. Okay, so we are running in time. Thank you everyone for joining. Let me send you a link to the next stream about revenue. Let's see where it is. Should be right here. Okay. So this is a link to the next stream. Let's see if it's working. Okay, thank you and let's meet in a few minutes.